a dismal day on the market front, and I hope you see it as an opportunity to get into the market, or does this make you wonder about the future, Rhynardt?
Yeah, I think it's very difficult because obviously the last month has been a spectacular month, and in fact if you look at the performance, and for example like there was a stat out saying that I think it's the biggest monthly rise in the Dow Jones in the last, I don't know, 100 years or something. So to get back in now I think is a little bit risky, and in my mind, I think I kind of still think that there's a fair amount of risks, I believe, to the downside, and best case outcome, maybe our market goes sideways. I don't think that there's a lot of value to be found in like the SA domestic shares, and the commodity shares may be, but there's still a lot of global uncertainty. I think on the positive front, there's better data coming out of the US and China. I'm not too worried about, but the focus is still very much what is happening in Europe, what's happening in Greece, and of course now we've seen that there's a Greece that there is now being suddenly like a referendum being called. So that just adds to all of this kind of uncertainty. But I think we have to bear in mind that last month was a spectacular month, so I'm not surprised to see the market really coming off. We've
got the likes of Rhynardt, which is down 5%, African Rainbow Minerals down 5%. We've got stocks that really came under significant pressure today. Is this really just in the hands of global sentiment and the fear of what the global outlook is going to be like going forward, and not really based on valuations and fundamental factors? It seems it's just a sentiment game right now.
Yes, definitely. I think on a day-to-day basis, it is fear, greed, and sentiment that kind of drives markets. And over the medium to longer term, it's certainly fundamentals and valuations and earnings and cash flow and all of those kind of things. But on a day like this, I don't think you should be reading too much into Rhynardt being down over 5% in rands, and in dollar terms, I think down 7 to 8%. Also, as I said, bear in mind that it was one of the best performers, if not the best performer, on the top 40 last month. I think up close to 30%. So on a daily basis, who knows what is actually really going to happen, but we're in a period where there's a lot of heightened volatility, and I think it's going to last probably for a couple of weeks to come.
We had a few trading updates over the last couple of days. AVI out today reporting a 10.9% increase in the September quarter revenue. We also had very similar numbers out of Shoprite yesterday, and Shoprite taking quite a big knock. It was down 4% yesterday. What do you make of these numbers? Can we expect more double-digit growth from the likes of AVI, which is in the food processing business, of course Shoprite more in the food retailing business?
Look, if you look at the AVI numbers, I think it was a fairly good set of numbers. To grow revenues by greater than 10% in this environment where consumer spending is certainly under more pressure, I think it's very well done. If you break down their business, on the fishing side, their I&J business will certainly benefit from a slightly weaker rand. The fashion retail business, which is really the Spitz business, have done a lot better than what I would have thought the last year or so. There's obviously a massive market for expensive Italian shoes. And then really the biscuit and baking business have kind of really just gone from strength to strength. So if I kind of have to put a number on it, I think with that kind of revenue number, I think margins for them is probably likely to hold up. I think we can probably expect an earnings number for the next year, maybe of north of 15% would be a good outcome. But bear in mind, it's been a spectacular performer. I think the forward multiple is just north of like 11 times, which doesn't make it look too bad, but I think the level of earnings and the level of the operating margins are certainly becoming relatively high, and I don't think that's quite sustainable. For Shoprite, yes, the share took a bit of a knock. It doesn't surprise me. I think it's very expensive. The forward P on our numbers is close to 19 times. And the numbers that they did produce yesterday certainly doesn't justify that type of rating. I'm still relatively perplexed why especially foreign investors love our retailers so much.
Giokos also out with a trading update, and also Marcel van Olok is the new chief executive. Casinos right now, would you even be going close to Giokos?
It's an interesting one, and that Togo is kind of a new company. We know it was formed when the Togo group merged with the Gold Reef assets. I think it looks pretty interesting. I think it's probably the one SA domestic sector that has done very badly. And if you really have to compare the fortunes of the casino industry relative to the retailers, say over the last 2 to 2.5 years, the casino businesses have certainly done a lot worse. So from a peer valuation point of view, I would be more attracted to the casinos. Having said that, it doesn't seem like they're yet in the kind of operating environment that's going to make for good share price gains. Revenues have been relatively sluggish, I think growing at roughly about 6 to 8% on the gaming side. The hotel industry has obviously been under enormous pressure. There's overcapacity, which means that on a profitability basis, I think they would have done very well to be slightly down, which is what they have reported in the first six months or so. I do think their cycle is fairly close to the bottom. I think it could probably only get better. Their profits haven't really grown much in the last 2 to 3 years, so that would probably be a sector that I think does look relatively interesting. But you kind of do have to be very patient.
Let's touch on Sasol, also out of news out of Sasol that it is going to be opening up processing plants in Mozambique next week, gas production there, also looking at further exploration in the likes of Botswana now, a joint venture with an Australian company. Sasol is down 3% in today's session, and an oil price which has actually been relatively stable, above $100 a barrel.
Yes, definitely. Sasol is one of the shares that we do like. It's one of the larger holdings in some of our funds. If you look at the oil price, I think it has performed a lot better than what I would have thought, just given the global macro outlook. And then, of course, the rand is also a lot weaker. And what Sasol does tend to do, we always draw the charts of Sasol relative to the rand oil price. And what you're seeing, again, is I think probably a short-term trading opportunity, in that Sasol is diverging from that rand oil price level. I kind of also think that the company does have growth options that's not really being reflected in the rating of the share. I mean, it just continues trading on 9 to 10 times forward earnings. But there's a new management team that I think might be able to unlock some of the value. So it is one we like, and it is probably one of the top 40 shares that I think is not very overvalued at current levels.